Hello traders, here Chris Capri, secondskiesforex.com. So we have another video in this intro to trading series we have here. And this is a very important one because it's talking about kind of a foundational approach to understanding price action and order flow. And I think this is something that's often misunderstood. It's often the traditional narratives about price action out there is not really accurate at all. There's no prop firm or hedge fund that talks about price action this way. No bank traders. But through really good marketing, there's been kind of this really strange narrative that's been put out there. And coming from my institutional experience and working as a broker on Wall Street, working as a hedge fund trader, we have a completely different approach to understanding price action and order flow. So this is a super important video, and I want you to really pay attention to what we're talking about in this video. So with that being said, let's go ahead and move on. So trading really is a game of information, but it's not the kind of game where you want to become like a PhD who soaks up as much information as possible. It's more a game of information when it comes to technical or fundamental information. And what that ends up translating is that all information must be interpreted by the market. Whatever happens in an economic news event, if the market starts to move really fast and it looks like there's a lot of buying or selling, whatever is going on in the market, all information must be interpreted by all the different market players. And in the end, every single interpretation, regardless of the approach, whether it's a technical or fundamental approach, or if it's a sentiment approach or it's a flow-based approach, is going to result eventually in a buy and sell order. If that information and interpretation of the information in the market doesn't result in a buy and sell order, it's completely meaningless to you. It doesn't mean anything. But once that information gets translated, interpreted and translated, and becomes a buying and selling order from the various market participants, that's when that information becomes useful to you. And the way it works out is the total amount of buying and selling orders in the market creates what is called order flow. So I could have a view on the euro US dollar, and I think, or let's just say the pound dollar, and let's say I think that Brexit's not going to happen and I think it's going to have a negative effect on the pound dollar. Well, then that would lead me to be bearish on the pound dollar. But if I don't make a trade on that, or I don't hit the buy and sell button and get involved in the market on that, then that interpretation is completely meaningless. However, if I'm a large player and I have that interpretation and I use that information to make a large sell order on the pound and it causes the market to move, then that information has value. It has value to all the participants in the market. And so the total amount of buying and selling orders that are activated becomes what is called order flow, or the flow of orders in the market. And changes in the order flow and all the buying and selling orders that happen in the market is what creates price action. And so if there are more buying orders in the market and there's more volume on the buy side than the sell side, then the market's going to rise. And the opposite, do the opposite and the market's going to sell. We are directional traders. We think the market's either going to go up or down, and we want to profit from that direction. And so our study as traders has to be about understanding the order flow behind the price action. This is a super important way to understand and approach the market. Now, order flow is the most proximate driver of price action. There is no other thing in the market that's happening that is a larger or more proximate driver of price action. Therefore, by default, your study as a trader who looks at charts has to be to understand price action, so you can understand the order flow behind it and see who's in control, who's not. When are they taking control? When are they kind of pausing in the market? Where is the momentum? Where is it not? And that information behind the order flow can generally be of two grand types, technical or fundamental, and there's really four major types of information. There's technical, there's fundamental, there's sentiment, and flow-based information. All four of those types of information or classes of information translate into order flow, which it gets reflected in the price action. So it's super important you understand how the market moves, how the price action forms, and why. Now, there's two types of orders in the market. There's resting orders, which are orders that are, say, like, hey, I want to buy or at a sell at a future price. Those are considered potential liquidity. But until those orders get activated, they do not have an overall impact in the market. Once an order gets activated, then it becomes part of actualized order flow and thus has an impact on the market. So right now, Euro US dollar is trading at about 113.47 as of the time of this recording. If I have an order to buy at 110, nobody's paying attention to that market. Even if it's a really large order, the market's looking at it and saying, like, look, that's hundreds of pips away from the market. That's not really that important right now. But if I place that same order 5 pips under the current market, then people are going to start paying attention. And once that order gets filled, then the market's really going to pay attention because it's going to have an effect on the market. So it's important to understand that ideas and interpretations and orders in the market don't mean much until they become actualized and activated. Once they do, they become part of the actualized order flow and thus have an impact upon the price action. Now, when we talk about price action, we talk about price action contextually, and I'm going to get a little bit more into this in a further video. But the general narrative that you hear from most of these kind of marketers, which are really more marketers than traders, is that you should be trading candlestick patterns like engulfing bars and, inside bars and fakies and pin bars and all that. But the thing about it is that no professional prop firm or hedge fund talks about price action that way. You can walk into 100 of those firms, hear them talk about price action. Nobody's going to mention those words, which should tell you what they think of price action, how price action is really viewed by professionals. The general narrative, this kind of freshman narrative about price action, is that you need to pay attention to these 1 and 2 bar candlestick patterns. But when we look at these 2 bars right over here on the chart or on the video here, it doesn't really tell us much about anything of the underlying order flow. And so really, when you think about it, a couple bars does not mean much about the dominant order flow in the market, which is spread out over bars and bars and bars. And that creates a structure, and that informs the overall professional traders what's going on with the market. Who's in control, who's not? Where's the dominant trend, which is not? When are they getting in? When are they pausing? Where are they taking profit? Where are they not? These 2 bars alone do not give you that information. It's the collection of many bars and this kind of picture. Now you see a much more enhanced picture. Those 2 bars don't mean a whole lot, but when you look at this picture, you can kind of see how they're meaningless in this larger trend. And so the overall collection of bars and price action and order flow forms a gestalt. It's this kind of overall communication as to what's happening in the market. And when we look at this, we can see the market is rising. It's in an uptrend. Those 2 bars alone do not mean much. In fact, when you look in the larger context, they're meaningless. That's why when you look at price action, you have to look at just what's the overall gestalt or structure of the price action. We approach price action contextually or structurally. We teach you how to look at the overall context and structure and then determine who's in control, who's not, where is their momentum, where is it not, where are they taking profit, where are they not. And when you glean that information out of the price action context, then you can become a much more informed trader and have much more accurate buying and selling structures and signals and really understand how to trade with the underlying order flow in the market. It's important to understand that this is such a core skill that it's the kind of skill that you can apply in any instrument, any time frame or environment. If somebody teaches a strategy that can only apply on, say, higher time frames, then really they're not teaching you a core skill or strategy. They're teaching you something that's limited in application. And let me tell you, when it comes to sports, footwork in football or basketball or soccer is not limited in application. Being able to have good shooting mechanics in basketball is not limited in application. It applies to every aspect of the game. These are core skills we're teaching you that can work on any instrument, any time frame or environment. That's how important these are. So it's super critical you understand this approach and type of thinking. Now, one other rookie mistake that you want to avoid when it comes to understanding order flow and price action is this kind of marketing narrative I talked about, which is about confirmation. You often hear the word confirmation price action signals, or I'm using this to confirm my entry. The thing about it is that when you go into a hedge fund or a prop firm, they're not going to talk about this language, because these supposed confirmation price action signals, like these pin bars and inside bars, they actually don't increase accuracy, they decrease it. And the thing about it is the reason why they talk about this is because it's designed to appease a very small segment of the market. When you understand the fundamental roots behind this kind of confirmation mindset, it actually stems from a retail trading mindset. It stems from this beginner mindset that I'm not confident on what the market looks like. Is it bullish or bearish? I don't know if this, trade setup's going to work. So I need confirmation. I need something to give me more information to tell me that this buy or sell signal that I'm wanting to get in is accurate. But the thing about it is that's how beginners approach the market. Professionals don't approach the market that way. And it's because they realize that there is no confirmation. You can't confirm anything in a market where there is no certainty. There's only probabilities in this market. Trading is a probability-based approach. Confirmation doesn't exist in trading, only probabilities, and it's how professionals think. No professional is thinking, I need to confirm that this bullish setup's good. No, they already know if they want to be long or short well ahead of time. They're not using a 1 and 2 bar candlestick pattern to confirm anything. Professionals think in probabilities. They don't think in confirmation of certainties because they know they don't exist. They think in probabilities, and that's how you have to think. Once you get past this hurdle, you'll start to see major changes in the way you approach trading, in your mindset, and how you look at each and every individual trade setup that you take. This is super important that you understand this. So with that being said, I hope that you really understood the core concepts and methods that we're teaching in terms of understanding order flow and price action. This is really critical because once your mindset really adopts this as a way to approach trading, order flow, and price action, it shifts your perspective forever. And it allows you to see the market in a way that a professional trader is going to approach it. So with that being said, I hope you enjoyed this video. I hope you really kind of took this to heart because it's super important. And I hope you really take this on as your approach, because once you do this, you're going to see the market differently than a lot of the retail traders who are continually struggling with the wrong trading approach and wrong mindset when it comes to price action and order flow. So with that being said, I hope you enjoyed this video, and I'll see you in the next lesson.